Hello, Avneet, are you there?
Good evening, sir. Sir, am I audible?
Yes, perfectly fine.
Good evening to everyone present here. I, Avneet Kaur, volunteer of Sambhav Initiative and moderator for today's event. On behalf of organizing committee, I extend a warm welcome to our esteemed dignitary, Mr. Uday Makwana, sir, and to all the participants in this 2 weeks online national capacity building program on art of contract drafting from fundamental to enforcement organized by Sambhav Initiative, which is working towards alternative dispute resolution, free legal aid, mental health, and creating legal literacy under the direction and guidance of Patron in Chief of Sambhav Initiative, Honorable Justice C.K. Thakkar sir, former Judge of Supreme Court of India, and Patron of Sambhav Initiative, Honorable Justice M.R. Shah sir, former Judge of Supreme Court of India, in collaboration with Pro Bono India, which is working towards legal aid and legal literacy, where today's session is all about lending and security documents. We are privileged to have with us an accomplished professional whose insights will add immense value to our understanding, Mr. Uday Makwana, sir, former center head of Axis Bank. Sir is the founder and CEO of Halton International, a dynamic and rapidly growing enterprise in the field of ceramic and building material exports. With a sharp strategic vision and a relentless drive for innovation, Sir has played a pivotal role in shaping global business opportunities and transforming industries. Previously serving as Vice President, Strategic Initiatives at National Foods, Sir led high impact growth projects and organizational innovation with exceptional leadership. His career spans over 15 years of experience across international business, strategic planning, banking, and venture capital, holding leadership positions at institutions such as Axis Bank, Modern Food Products, and Ignition Capital Advisors. Currently, Sir also serves as the Governor of Governing Committee at Vishwakarma Panchal Chamber of Commerce and Industry, where he continues to mentor businesses and foster sustainable growth at community level. We are deeply honored to have you with us today, sir. Over to you, sir.
Uh, Thank you so much, Amniji, and would like to congratulate first of all Sambhav Initiative for taking such a great combination of various topics. So I think this is something which is remarkable and bringing professional uh, who have spent a sufficient time in the industry, that will be a remarkable. So thank you so much, Sambhav Initiative, for giving me this opportunity. I'll just start with today's topic. So this is something which is uh, on lending and security documents. So first and foremost thing, I would like to just give all of the members a warm welcome. And this is something which, as a professional or maybe a legal expert, we should understand about the overall nitty-gritties of lending and security documents. So let's dive deep into the session. So the first portion of the session is lending and security documents. So basically, lending and security documents, what exactly we are going to cover a five sub portion. In the first portion, we are going to cover a loan agreement. So basically, what is the loan agreement? So it is the agreement between lender and the borrower, and which has a specific terms and conditions which is specified for the lending. And there is a one clause which is related to repayment and lending. So there are various parties to particular loan agreement. So currently what we are going to see is, in the loan agreement there are two options. One is retail loan and the another option is corporate loans. So we are going to see both the options in the light. So first and foremost, we are going to see the retail loan agreements, which is going to carried out in between individuals and households. So as a lender, bank and financial institutions are going to get such documents with the individual or any households. So first and foremost thing, there are certain aspects which we need to deep dive into, are loan amount and the purpose. So the agreement should contain a clear purpose. Say, for example, for buying a house or buying a car or going for a vacation, it's for a personal purpose, or maybe it is going to be for the individual requirement. So that has to be mentioned clearly, and the amount should be specified. The second thing, there has to be a rate of interest. The rate of interest are of two types. One is floating rate, and the another one is fixed rate. So everyone knows that a fixed rate is fixed for the tenor, and the floating rate would be changed as per the RBI policy and the repo rate changes. The next one is repayment terms. So the repayment term should be clearly mentioned. And what there are three main components. One is EMI amount, which can be a monthly only. The number of installments, what are the maximum numbers that is permissible based on the income of the individual, and the repayment rules, prepayment rules, like if the individual is having let's say savings or maybe additional amount from the other sources, he or she may be allowed or not allowed for prepaying the loan. So it is covered under repayment terms. The other specific aspect is collateral or security. So the collateral can be of two types. One is fixed, the another is liquid. So liquid collateral covers fixed deposit, shares, then uh, uh, postal deposits or security, and such kind of. The fixed collateral security is, we can consider it as a immovable kind of security, like bungalow, then factory, or maybe a constructed shed. All those are considered as a collateral security. We need to also think or maybe deep dive into the other charges like processing fee. There is one component, it has to be mentioned, the processing fee, the late payment fee. If borrower is not complying with the certain conditions of the agreement, then late payment fee has to be mentioned there. uh, in certain cases, when let's say if borrower, currently we are having a two systems, one is ECS and the another one is NEFT. So in the case of NEFT and ECS, if the account does not have any balance, then definitely the bank is going to deposit a security check. And if it is bounced, then what are the charges and other things? So it covers under the other charges section. The specific point which needs to be covered here, it is insurance. So in every cases, the overall loan or maybe the collateral needs to be covered. Is it a compulsory or not? That has to be on the purview of the lender. And the another option and last option is default and the consequences. So in case of default, what are the consequences that the borrower is going to face? So it can be a asset seizure, legal action against the borrower, or maybe a CIBIL score issue, or maybe the repayment. In case of any repayment, then his overall credibility can be down. So these are the main aspect that are covered under the retail loan agreements. The second aspect of loan agreement is corporate loan agreements, which are specifically carried out in between the corporate borrowers and business houses. So it has a certain kind of common modalities, such as a retail loan agreements, loan type and amount. In companies and businesses, there are certain purposes like working capital, or maybe uh, a long-term expansion, or maybe it is for the capacity building. So these are the main purposes of the loan. And the interest rate, definitely it has been linked with MCLR, or the rate linked to RBI. So it is up to the borrower and the bank that they needs to decide that which benchmark they would like to select. And specifically for term loans, there are uh, certain options for payment of monthly, quarterly, or maybe if bank allow, there is an option of 6 month payment or bullet payment also it is allowed. And post that, if we can see tenor and repayment, so in tenor and repayment it is same as retail, but there is one more aspect that is called moratorium. So in case the borrower is going to, let's say, build a factory, but the production is going to start after some times, then bank can consider their request for the moratorium. So that moratorium can be granted to the borrower. The other aspects are collateral securities. In general senses, the collateral securities can be of immovable properties, maybe inventory, stock, receivables, and personal and corporate guarantees of director. These are to be considered as the security and collateral. See, other covenants which are stipulated in the specific corporate agreements are financial covenants and certain kind of uh, let's say financial and non-financial. So in financial covenants, the borrower has to take care of certain aspects like they have to maintain debt to equity ratio, they have to maintain a working capital in let's say 70-80% of the portion. They also need to take care of the overall service coverage ratio. So these are the financial covenants. Hello, am I audible properly?
Yes, sir, you are audible.
Yeah. So we were discussing about non-financial covenants. So in non-financial covenants, there are certain aspects like if the borrower needs to submit certain kind of documents, let's say a stock statement regular, then the progress report. If all those documents are not submitted in prescribed time, then definitely there is a penalty to the borrower. That also those kind of conditions should be mentioned in the agreement. There is a specific uh, reporting. So we have just discussed that regular submission of the financial numbers or stock statements and other progress reports, it will cover under reporting. And restrictions. So the corporate loans are given for specific purposes. So those purposes needs to be taken care while you you or as a borrower you are using that particular aspect. So we are moving to the next portion, that is at the event of default, what could be the consequences. Those consequences also needs to be mentioned, like in case of non-payment, what will happen in case of financial distress or maybe breach of certain terms, what exactly needs to be taken care, that has to be mentioned. So we can also discuss there are rights and obligations of bank. So basically, in as far as the corporate agreements are concerned, the rights of the bank is the bank can very well inspect the business, uh, and they can also inspect the stock, what are the submitted numbers and what are the actual numbers. They can also verify those kind of things. And if they found any differences, definitely they are going to charge the penalty. They may charge the penalty as per the agreement. So it has also been mentioned in this agreement. So last but not least, fees and other charges. There are certain charges like processing fees, renewal fees, legal fees, foreclosure charges. Like if the loan is closed uh, before a specific period, then definitely there would be a charge, because the bank has invested or bank has given that particular money based on the overall tenor. I would like to request all the participants, if you find anything like if I'm going too fast, or maybe if you want to ask any question, request you to kindly let me know so that I can retake that particular option, because this this is the document which has been defined or devised based on the very simple aspect. It is easy to understand and easy to carry out. So if you find anything, just let me know. I can recover that particular point. So let's move to the main part, that is the comparison table. So what exactly the difference between retail loan agreement and corporate loan agreement? So retail loan agreement consists of personal use and corporate is for the business purpose. The interest type generally fixed and floating. The both is available in corporate as well, but the benchmark is different from the retail, like BPLR, MCLR, or repo rate. Security, it can be like movable or immovable in retail part. In corporate part, generally both kind of security, but the the fixed securities or maybe immovable properties are of the major portion. The repayment are generally EMI based, and as far as the corporate agreements are concerned, where the repayment can be monthly, quarterly, or maybe sometimes half yearly also. Fees and charges are both generally same. At the time of default, the overall difference is the asset seizure or maybe a credit score, means CBIL score impact in the both cases. In the cases of business loan, there are certain more chances where they post enforcement of the collateral, it will be it will be treated, or maybe the insolvency is also come into the picture, and the governing law generally would be the local jurisdiction where uh, the both lender and borrower are staying. So we have covered the loan agreement part as far as retail and corporate borrowers are concerned. So if you have any question till now, you can very well ask. Otherwise, we can move to the next topic, that is mortgage deed. So participant, do you have any question? You can also unmute yourself and ask about particular topic. So it will be easier for me to explain.
Anybody have any questions?
So fine, we are also going to keep the question answer session at the last fag of the presentation. But in between, if you have anything, you can ask. So let's move to the next topic, that is mortgage deed. So basically, as name suggests, the mortgage deed has the two parties, borrower and a lender. It gives a lender the right to seize the property in case of any misconduct or non-repayment, and basically it allows a bank to have a certain security against the loan they have provided. So these are the main three elements of mortgage deed. Let's dive deeper into the common elements of the mortgage deeds as far as retail and corporate loans are concerned. So as we understood, the parties are two. The second one is loan and the security. So there has to be a specific amount, and uh, the specific details of the security needs to be mentioned in the mortgage, plus the landmark or exact details which has been mentioned in the dastavej or maybe uh, this sale agreement. And the specific part I would like to cover is, there are basically a two type of mortgages. One is simple registered mortgage, and the another one is equitable mortgage. So generally, the as far as the banks in Gujarat are concerned, they go for the registered mortgage because uh, it is one of the safest mode, and there are certain aspects where the equitable mortgage is also carried out. The third and important element of the mortgage deed is purpose of loan and duration to repay. The both needs to be very effectively mentioned in the agreement. The fourth one is repayment terms. So there are multiple repayment terms as far as the retail and corporate borrowers are concerned. So there has to be a specific repayment schedule which has to be mentioned in the mortgage deed. The interest rate detail clearly specified with the benchmark, and at the time of delayed payment or maybe misconduct, the overall procedure needs to be mentioned. The fifth element is rights and duties of the borrower that we are going to cover. So the borrower, as agreed terms, he or she has to repay as the borrower. The properties and the security and collateral coverage needs to be insured and well maintained. And in case of they want to they want to reuse, or maybe they want to go for additional, let's say if somebody is having a fixed asset or maybe a plot where one portion is vacant, if they want to give that vacant portion to rent, then definitely they have to also take a concurrence of bank in writing before taking giving that particular property for the rent or maybe a transfer. So it clearly mentioned here, bank provides the loan, that is their duty, and if the loan is not repaid on time as per the specified terms and condition, they can sell the property and they can recover the dues. The sixth element is default clause. So let's say if the borrower is defaulting, then definitely the overall details of that, uh, the punishment and everything, what are the consequences, that has been mentioned there. So uh, next we are moving to the release clause. So once the loan is repaid, then there is specific clause in the mortgage deed which mentioned as that if the loan is repaid along with all the dues and as per the schedules, uh, then the overall mortgage deed can be released and the collateral would be given back to the borrower. There are a few other points like that needs to be taken care while creating a mortgage. So as far as the borrower is concerned, there are certain charges like mortgage charges, stamp duty, legal, registration, insurance, that needs to be borrowed by the that needs to be uh, paid by the borrower or the the follower of the loan. And the jurisdiction, as discussed, it has to be mentioned, or it has to be clearly mentioned as far as the local parties, both local parties involved. So this is all about the mortgage deed. We are also going to deep dive into a simple format of mortgage deed, how it look like. So it should have a specific date and the details, the party details along with the address, the lender details, borrower details along with the address, plus exact name as per the registrations. It should contain a property details like uh, where the property is located, demarcation, and the basic description which has been provided in the mortgage deed or a legal document like a sale deed and dastavej. The next component is loan details. So loan details should be mentioned clearly what exactly the amount in words and in numbers, both should be mentioned. Interest rate along with the details, fixed or floating, and the purpose. The another element is repayment terms should be clearly mentioned, like how many months of total loan, and when it is going to close, in the sense the last installment details. The mortgage deed should contain a repayment schedule as far as mode of payment also. The borrower related covenants should be mentioned, like repayment of loan, then the maintaining of the property and the collateral uh, prop, properly, or maybe it should be as per the bank's desire or in good condition. In case of sale, lease, transfer, or rent, the written permission is required. That also needs to be mentioned. There are certain details which which are the bank's right, that has also been mentioned here. The another specific things that we need to take care is the default clause. So in case of any default, what are the basic consequences that has been mentioned in the deed itself, and post repayment of the loan, the discharge and release details can be done. So if the loan has been repaid, then the discharge from the particular case should be done. So some there are as discussed earlier, there are miscellaneous things like the basic cost for carrying out this particular mortgage deed is stamp duty, registration, insurance, and all the charges, other charges, let's say uh, index and other things, may be borne by the borrower. And it should be the jurisdiction, local jurisdiction needs to be mentioned properly. And finally, there are the signatures of borrower as well as the bank officials, including two witnesses. So this is the basic format of mortgage deed that we have just gone through. There are certain elements which are differing as per the bank's requirement. So every bank has a different policies, and based on those policy and guidance, bank may add or delete certain kind of clauses. But these are the most preferred and standard clauses that we have discussed as of now. So we are now moving towards the next third document, that is a deed of hypothecation. Basically, deed of hypothecation, it is for the movable asset. So asset that we have discussed, like stock, inventory, vehicle, book debts, or maybe other movable assets, which those can be considered as a collateral part. So hypothecation uh, can be also in case of retail loans. So in case of retail loans, if you consider if the purpose, like owning a car, or maybe buying a machinery for personal purpose, or maybe for the vacation or those kind of purposes, the the possessions, the car, machinery, like those possessions can be hypothecated as far as the retail loans. In corporate loans, the hypothecation is done against the the inventory, which is movable or which is constantly changing, and equipments and receivable of the company. So basically, hypothecation contains the the different parts, like the immovable parts are uh, contains in the hypothecation deed. So based on this criteria, we have understood the hypothecation, uh, how it is done. So which are the common element as far as the hypothecation deed is concerned, and we are covering both retail and corporate. So as we discussed, there are two parties, borrower and lender. The asset pledged. So we need to understand first that the security is movable. So let's say inventory or maybe a stock lying in the stockyard, uh, then vehicles or maybe receivable book debts and receivables are pledged, and the details, specific details needs to be mentioned. Say for example, in the pledge agreement, if the stock has been kept at the particular place, the details of the place along with the full address needs to be mentioned, and the overall average quantity should be mentioned in the hypothecation deed. It should contain the loan details like amount, interest rate, purpose, tenor, and repayment terms. So borrower, we are also the borrower obligation. We will also discuss the borrower obligation as far as the hypothecation deed is concerned. So as uh, mentioned earlier, in all types of documents or maybe a legal formalities with the banks, the specific borrower obligation are they have to pay the loan as agreed. They need to keep the assets as per the bank's requirement. The assets are to be insured properly, and they cannot take any decision related to asset like lending or maybe changing uh, the form or maybe like giving them on rent without the permission of the bank. So same, the bank's rights are they can, in case of any defaults and defaults or non-payment of the amount, they can take the possession, and they can also inspect the specific collaterals or stock or maybe the items on their discretion. So in every agreement there is a default clause which has been mentioned, and that default clause should contain the consequences and the overall the conditions. So in case of a non-payment or maybe breaching of any condition of the deeds, the this the there is a default clause will come into the picture, and bank has a right to seal or seize or sell the asset with the by following the proper legal formalities as per uh, the competent acts. And uh, in all the documents and agreements there is a specific also a clause mention of the discharge and release. And uh, as discussed earlier, there are miscellaneous charges and stamp duty and other charges needs to be borrowed by needs to be paid by the borrower, and the jurisdiction needs to be mentioned in the agreement. We are going to see the sample format of hypothecation, how it look like. So specific uh, mention of there has to be a specific date of the execution should be mentioned, and the details of the parties along with the address, description of hypothecated assets like stock in trade, inventory, vehicle, receivable, along with the specific, let's say if uh, would like to give an example of HUL. So HUL is having multiple facilities, and HUL is also doing certain kind of contract manufacturing. So in hypothecation agreement they have to give the information of all the contract manufacturers where their goods are manufactured, and those goods which are on transit. So they needs to give the details and the specific let's say the average details should be mentioned there. The third important aspect is loan details. So as discussed, the specific amount is mentioned in numbers and words. Interest rate should be clearly defined with fixed and floating details, purpose of the loan, and tenor details. The hypothecation agreement should also contain repayment details like how it is going to repay and mode of payment through ECS, NEFT, or bank check transfer or RTGS. So borrower covenants and bank rights are the same as discussed earlier, and default clause is also the more or less the same. In case of the failure of the repayment or non-payment, the bank have all the rights to seize and take the action against the borrower. Release clause is also the same. Post repayment of the loan, the bank will release the hypothecation and the specific formalities needs to be completed. And miscellaneous details as discussed, all the charges will be borne by the borrower and the jurisdiction needs to be mentioned. In the hypothecation agreement, basically there has to be a signature portion along with the witness of a two member. So till now we have covered the loan agreement, hypothecation agreement, and mortgage deed. So we are going to cover the fourth part, that is pledge agreement. So as definition suggests, pledge also agreement, the pledge can be covered like liquid assets. Say for example, shares, gold, silver, and mutual funds. Such kind of assets are to be placed, and those assets are should be in the possession of the bank, and uh, bank will create the pledge over those movable assets that we have discussed. So the pledge agreement covers many aspects. Let's discuss the scope. So specifically, pledge is comes under the certain circumstances when we go for a gold loan or loan against property, or maybe loan against mutual fund, or uh, we can also in certain cases loan against liquid securities like bonds and other things. In case of corporates, the corporates are specifically holding the shares in the name. Let's say listed corporates are holding the shares in their name. If they want to borrow a money based on their holding, they can pledge the share and they can get the money from the financial institutions. As in the regular agreements, uh, in pledge agreement, the parties, there are two parties, one is borrower and another is lender, and we generally call borrower as a pledger in other terms. So assets which are placed on which can be placed are like shares, mutual fund, gold, silver, bonds, and goods uh, which can be taken into the possession of the bank during the loan period. The loan details also should be mentioned in the pledge agreement as overall as we discussed in the other agreement: amount, interest rate, duration, the purpose, and the repayment as per the discussion or maybe as per the requirement of the lender and borrower. So borrower's rights and bank's rights are also the same as per the other deeds that we have discussed. In case of default, uh, the bank can sell the pledged asset, and as far as the discharge and release of the pledge is concerned, the borrower has to repay the overall borrowed amount along with the interest and due other charges. So, and miscellaneous, we can, as discussed earlier, all the charges related to pledge or maybe uh, pledge needs to be borrowed, needs to be paid by the borrower, and the legal jurisdictions needs to be properly defined. So we are going to see the format of pledge agreement. It is more or less same as the hypothecation agreement, but the description will be changed. So let's dive into the uh, format part. Parties, there are two parties, lender and borrower. We can also call them a pledger. Asset, those assets which are placed like uh, gold, silver, uh, shares, mutual funds, bonds, those details needs to be mentioned clearly along with the security code. The next details which needs to be very well defined is loan details, where the loan amount, interest rate, and purpose should be clearly defined. The terms of the pledge. So there has to be a clear understanding between borrower and the lender about the terms, and it should be clearly mentioned in the pledge agreement. So borrower covenants and bank rights both uh, are the same as discussed earlier. We need to take care as let's take the example of such covenants, in the sense, say if the borrower has pledged certain assets, then they have to also ensure that the timely repayment and the other terms and condition should be taken care. The default clause will also carry the same things, non payment plus breach of the terms and condition of the loan agreement, and same as release, the release of the pledge. So it will be mentioned in the agreement how uh, the release can be uh, can be done. So say for example, if they have placed mutual fund, so post repayment of the loan, the overall pledge can be released. And as discussed earlier, the the charges and the fees of the let's say if in case of stocks or maybe mutual funds or maybe bonds, the uh, specific service provided charge needs to be paid by the borrower, and the jurisdiction needs to be mentioned clearly, and this particular agreement needs to be signed by both the parties along with the two witnesses. So till now we have covered the fourth aspect, that is pledge agreement. Now we are moving towards the last part, that is no due certificate. So as name suggests, it is it is to be issued to the borrower by the bank in case of repayment as per the final sanction of terms and condition, and by completion of all the formality related to borrowing agreement or sanction letter. So there are multiple things we need to discuss, we need to take into the consideration. So this is the official document, and it is to be handed over to borrower post repayment of all dues while taking care of the repayment and all the conditions. So no due certificate consists of few specific element. One is purpose. So purpose of no due certificate is to clearly give the confirmation from the lender that the overall conditions and the repayment has fully been provided by the borrower. It should be mentioned. It is to be issued by the lender or financial institution, and it is the must document as far as the proof, if you consider it as a proof of closure of the loan or any borrowing from the bank and financial institution. There are specific uses of this NDC. It is confirming, the NDC confirms that the closure is done and there is no outstanding. It is also required for the overall understanding and the legal document. It is also protects the borrower from the future disputes. The process is very simple. The borrower will give a request letter to the lender and financial institution stating that they have completed all the formalities related to sanction letter and the borrowing agreement, and bank verifies all the details. Post that, bank issues the no due certificate. So there are other two elements needs to be taken care. One is the legal value. So the legal value of the NDC is, it is to be considered as one of the most important document as far as the closure conformity by the bank, and the no due certificate should be written in very clean and concise manner. So as and when the same no due certificate is to be issued by the bank, the borrower needs to be taken care that the all the details related to loan and borrowing should be specified, and the specific details related to uh, repayment and the overall track record needs to be mentioned. So this is very simple, but one of the most important document uh, that one has to take care as far as the borrowing relationship is concerned. So till now we have covered the no dues part also. So we are also going to see the basic format of no due certificate so that it will have you can have the detail or you can have the depth understanding. So this is the sample format which should cover the details, borrower's name, his address, and the details of loan account plus the loan amount and bank details plus the branch details. And it should be clearly mentioned that there is no overdue, no dues outstanding against the liability of so and so sanction letter, and the specific no due certificate should be issued by the lender and specific authority, and there should be a specific stamp and signature along with uh, the signature number. So in bank, the authority has to be provide certain numbers which will be identified his signature number. So this is most important document and should be signed by the specific authority along with their signature number. So we have already covered 5 documents, and currently we are seeing the format of no due certificate. So till now, if you have any question, so we can answer the question, and post that we can open the forum for any specific requirement as far as these 5 documents are concerned. So Uh, this is overall composition of these 5 documents. So I think I have covered the detail and major aspect of the lending and security documents. So now the session is open for the question and answer session. So all are requested to kindly let us know your questions so that those can be clarified.
Uh,
Over to you, moderator.
Thank you so much, sir. Thank you so much, sir, for the wonderful session. Now we open the floor for question and answers. Whosoever have any questions, you can unmute yourself or can write your question in. So there are a few questions in the chat box. First is, could you please explain more about corporate loans?
Yes.
Sir, am I audible?
So yes. So as far as the corporate loans are concerned, so those loans are like working capital, which is required uh, for the, let's say, buying raw material or paying the vendors, or maybe it is for the like payment of salaries and other aspects. So working capital is for is a part of corporate loan. The another one is term loans. So basically, term loans are required for the expansion and upgradation purpose. So if any borrower would like to go for, let's say, capacity expansion, they'll go for the term loans. And term loans can be in rupees as well as, and it can be also in the foreign currencies. The other aspect is also a bridge loans. So bridge loans are also a part of corporate loans, where the loans can be given for bridging a specific gap. Say, for example, if the borrower is, let's say, has gone for the working capital, but in case of any seasonal order or maybe certain spike in the requirement of the raw material for fulfillment of the final order, so they can go for the bridge loan or maybe uh, a short term loan, which are also the part of corporate loans. So overall, you can say there are two portions. One is for the short term, the another one is for the long term. So working capital overdraft and the bridge loans are part of short term corporate loans, and term loans, foreign currency loans, then let's say loans for specific purpose of expansion, and all those are to be considered as a long term corporate loans.
Hello.
Yeah,
Good evening, sir. Thank you for the wonderful session, first of all, sir. So I've got two questions.
please.
Uh, so first of all, sir, is there a liability on the bank to maintain the assets if they are with them, deposited with them?
Yes. So basically, as far as the liquid or maybe the assets which are movable are concerned, say for example, if you have taken a gold loan, then definitely those gold loans, for taking those loan, you have to pledge the gold with them. So that gold needs to be preserved by the bank, and uh, it is the liability of the bank in case of any theft or maybe in case of any mishappening. The bank needs to be uh, uh, given back that particular uh, asset or maybe equivalent of the amount.
And so second question, sir, in bank loan agreements for retail customers, sir, there is an
Hmm,
interest on early repayment of these loans, sir. Like for example, if we
hmm,
close it before the tenure, they impose a certain interest. So, sir, what
correct.
is the basis for that, sir? And can we, for example, like negotiate and tell them that why is this there?
So first and foremost thing, I request all the members, when you go for any kind of loan, you need to discuss first about the basic conditions and the prepayment. It is called the prepayment of the loan. So prepayment condition needs to be discussed. If you go for, let's say, if you are a retail borrower, if you go for a home loan, definitely prepaying home loan, there is no charge. It has already been mentioned in the RBI's master circular. No bank can take charge or any penalty for the prepayment of home loans. But there are certain kind of loan for certain purposes. Say for example, if you go for let's say personal loans. So personal loans are given based on the overall credentials of the borrower, and bank and financial institution is taking a specific call. So in certain cases, they are mentioning that uh, the charge for the prepayment needs to be paid. So in
So,
certain cases it is there, but yes, being a prudent borrower, we can discuss and negotiate. In certain cases, we'll give you a live example. Uh, we have advised one of our client for the loan for their certain business expansion purpose, but they don't have the asset. So we have gone for the business loan. So business loan is unsecured loan and it can be provided by many financial institutions. We discussed with four institutions and we ensured that after a 6 month of proper repayment and track record, no charge will be taken if the loan is prepaid. So borrower has taken this loan for specific purpose. They have received one bigger order, and to comply or to fulfill that order, they need to go for raw material and payment to the vendors. So it is possible.
so sir, in a credit, so sir, is a good credit score also a factor to get a lower interest rate then?
Perfect. You are absolutely correct. Every bank has a lending matrix. So let's say if you once when you give application to the bank and financial institution, they will check or they have a specific a table where they mention everything. So how many loan you have taken till now, what is the track record as of now, what is your CIBIL score, is there any specific default by you, maybe one or two installments, or maybe if you have given a guarantee to any other loans, any other party for a loans, and if that party has defaulted, so that also is to be considered as your liability. So all those details are calculated, and the final score, based on that final score, the interest rates are to be decided.
Thank you so much, sir.
Yeah, most welcome, most welcome. So there is one question by Bhavik Mewada ji. What is the first action by bank for recovering the loan? So first and foremost thing, for any kind of loan, bank has a follow-up mechanism. So if you are not paying, let's say post 7 days, any interest or installment, you will get the call from local authorities. If still the borrower is not paying any kind of loan installment post 15 days, post 15 days, there is a specific team which is following up for the loans. You will get the follow up over the phone again and again, and post 30 days it will be handed over to the default team. So every bank has a specific a team which is assigned the task of recovering dues. We call it as a buckets. So if let's say there is a bucket called 15 days, 30 days, 45 days, 60 days, 80 days, and 90 days. So if any borrower falls into those buckets, the recovery will be based on that particular severity. So I have explained the first and last part uh, by the bank, which kind of action they take. These are the follow-up mechanism, and post note payment, they can give the notice and post that notice. If the borrower is not ready, then the seizure and possession will be taken by the bank, and then the auction happens. So hope I have answered the I have the clarified the question, Bhavik ji.
Thank you so much, sir, for a wonderful session. And on behalf of the organizing committee, I would like to extend our sincere gratitude to you, sir, for delivering such an insightful and thoughtful session today. We are truly thankful to you, sir, not only for accepting our invitation, but also for taking time to guide and inspire all the participants. Thank you so much, sir.
Thank you, ma'am. And ma'am, this workbook is specifically prepared for all the participants. So I'm just sharing that workbook uh, in the WhatsApp group. So I'll also request all the participants, in case of any support and help is required, I'm available over the LinkedIn. You can get in touch with me. My contact details are also given there. So definitely we can discuss in detail. And thank you so much, Sambhav Initiatives, for giving me this opportunity. I'm obliged, and thank you so much, all the participants, for your patient listening. Thank you once again, and have a great day. Bye bye.
Thank you so much.
Thank you very much, sir, and also thank you for sharing nice formats with us. Thank you.
Yeah. Thank you.